Welcome back for another deep dive. Today, we're going to be looking into something that might make you think twice about that phrase, too big to fail.
Oh, yeah.
We're talking about the collapse of Stenn, a UK fintech company, and how a US criminal indictment
Hmm.
set off like a chain reaction through the financial world.
Yeah, it's really a fascinating case study, isn't it?
Yeah.
It just shows you how interconnected the whole financial system really is
Yeah.
and how seemingly unrelated events can
Yeah.
trigger a cascade of consequences.
Exactly. And to help us make sense of it all, we've got a fantastic investigative article from the Financial Times that details this whole saga.
Ah,
Plus, we've got some additional excerpts that really zone in on the whole concept of risk management in the fintech sector.
right.
And they use the Sten case as like
A jumping off point.
jumping off point.
Yeah.
So for anyone listening who's interested in, understanding how these events can really snowball and what lessons can be learned to kind of prevent this from happening again,
hmm
we're going to unpack all of those insights along the way.
The big takeaway here is the whole concept of indirect exposure.
Okay.
So Stenn itself
Right.
wasn't actually a defendant in this U.S. criminal case,
Okay.
but its name was mentioned in the indictment. And in the world of finance, even just the faintest whiff of suspicion can be enough to set off alarm bells.
Makes sense.
Yeah.
And in this case, those alarm bells were ringing loud and clear over at HSBC,
Yeah.
one of Stenn's major lenders.
Yeah. They launched an investigation right after that indictment came out, and they uncovered what they called potentially suspicious transactions.
Oh.
Yeah. And this ultimately led them to apply to the High Court for administration of Stenn's UK units.
Okay, so when a lender applies for administration, what exactly does that mean?
It basically means they're forcing a company into a form of bankruptcy.
Oh, wow.
It's a pretty drastic step, but it shows just how seriously HSBC was taking those potential red flags.
That's a good point. It really shows that ripple effect that one single investigation can have.
Right.
So this U.S. case wasn't even targeting Stenn, but it still led to their downfall.
That's right. The indictment was focused on an alleged money laundering scheme involving Russian money.
Okay.
And while Stenn wasn't directly implicated, those details linking it to the case were enough to raise some serious concerns.
Yeah.
So, for example, there was a $1.7 million transfer from a Singaporean company linked to one of the individuals indicted in the U.S. case to a Stenn subsidiary.
Okay, so a money trail with potentially illicit origins leading to a Stenn account. I can see why that would make a lender pretty nervous.
Absolutely.
But was this the only red flag, or were there other concerns about Stenn before this?
Well, there were actually some pre-existing concerns about Stenn. For instance, their former auditor, EY, resigned back in 2018.
2018, that's quite a while ago.
Yeah, and the reason was concerns about related party transactions.
So can you break that down for us a bit? What exactly are those?
So basically, it's deals between companies that have close connections to each other, which, can sometimes be used to mask financial improprieties.
So even before this whole U.S. case, there were signs that Stenn's financial dealings might not have been totally above board.
Yeah, and this raises a really critical question for Stenn's other partners,
Yeah.
like Citigroup and Barclays and investors like Centerbridge Partners. Did they dig deep enough during their due diligence process? Did they adequately consider those pre-existing concerns before getting involved with Stenn?
That's a great point. It seems like this U.S. case was like the final straw, but the groundwork for Stenn's collapse might have been laid much earlier.
Yeah.
And it makes you wonder, what about the CEO, Greg Karpofsky? What was his role in all of this?
Well, Karpofsky has kind of a controversial past that definitely adds another layer to this whole story.
Oh, really?
Yeah, before Stenn, he founded a Russian invoice finance company called Eurocommerce.
So we're talking about Greg Karpofsky, Stenn's founder, and his previous company.
Yeah, Eurocommerce, which ended up collapsing amid allegations of fraud.
Oh, wow.
There was even a lawsuit filed alleging that the company was essentially built on fake clients and non-existent invoices.
So the guy running Stenn had a history with a company accused of some pretty serious financial misconduct. That's a big red flag.
It definitely raises some eyebrows. Now, Karpofsky has denied any wrongdoing in both of these cases. He maintains that any potential issues at Eurocommerce happened after he left the company. But his past involvement with a company accused of such activities definitely raises questions.
Yeah, for sure. It seems like every piece of this puzzle just reveals another layer of complexity. And you mentioned something else in the Financial Times article that really stood out to me, the connection to Silverbird Global.
Right, Silverbird Global. That was another UK fintech company that went under earlier this year, also due to potentially suspicious transactions linked to Russia. And here's where it gets interesting. After Silverbird collapsed its CEO, a guy named Maxim Folden joined Stenn as their chief customer officer.
Wait, so the head of a fintech company that collapsed under a cloud of suspicion ends up as a top executive at another fintech company that suffers a similar fate. That's wild.
It does make you wonder if Stenn really did their homework. Did they fully assess the potential risks of bringing someone like Folden on board, given his previous company's collapse? Maybe they overlooked this red flag and their eagerness to snag a top executive?
Yeah, it's like they say, personnel is policy. The people you bring into an organization can definitely carry risks with them. It's a good reminder for any company to be super thorough in their vetting process, especially when it comes to key roles.
Absolutely. But let's shift gears a little bit and talk about the broader implications of Stenn's collapse for the entire fintech industry. The excerpts you mentioned really zero in on risk management and highlight some key areas that need attention.
Okay, so let's dive into those excerpts. What are the biggest takeaways here for fintech companies and for investors?
One of the most crucial takeaways is the need for really robust transaction monitoring. I'm not just talking about your basic checks and balances. We're talking about sophisticated systems that can analyze tons of data, scrutinize those complex supply chains that often span multiple countries, and flag any activity that even hints at something suspicious.
So it's not enough to just look at individual transactions in isolation. You need to see the bigger picture, understand the patterns of behavior, the connections between different entities. And in Stenn's case, if they had a system like that in place, it might have flagged that $1.7 million transfer from the Singaporean company, right?
Exactly. A strong transaction monitoring system could have alerted Stenn to that potentially problematic transaction much earlier, allowing them to investigate further and maybe avoid the whole chain of events that led to their downfall. This is especially crucial in sectors like invoice financing, where the risk of fraud is inherently higher.
Can you explain why invoice financing is particularly vulnerable to these kinds of schemes?
Sure. So invoice financing involves lending money to businesses based on the invoices they've issued to their customers. The problem is these invoices can be easily manipulated or falsified. You can create fake invoices, inflate the value of goods, or create complex payment structures that make it hard to see the true source of funds. And without robust monitoring, these red flags can slip through the cracks.
So it's not just about having a system in place. It's about having one that's sophisticated enough to understand the nuances of these transactions and spot those subtle signs of potential wrongdoing.
Precisely. And this brings us to another key takeaway from those excerpts. The whole issue of regulatory arbitrage.
Regulatory arbitrage, what is that?
It basically means exploiting the gaps and inconsistencies between different countries' financial regulations. So you have companies operating in multiple jurisdictions, and they might try to take advantage of these loopholes to engage in activities that would be considered unacceptable or illegal in more tightly regulated places.
So it's kind of like a game of regulatory whack-a-mole, always trying to stay one step ahead of the authorities.
You could say that.
Hmm.
And to combat this, fintech companies need strong compliance measures. They need to be super aware of those potential regulatory gaps and really scrutinize things like know your customer data, which verifies the identities of their clients, and disclosures about ultimate beneficial ownership, basically, who ultimately controls and profits from a company. This helps ensure they're not inadvertently facilitating illegal activities.
It sounds like a never-ending game of cat and mouse between those trying to exploit the system and those trying to safeguard it.
It can definitely feel that way, which is why integrating compliance into the core of strategic decision-making is so important. It can't be an afterthought. It has to be part of the organization's DNA right from the start.
So it's not just about having rules, it's about cultivating a culture of compliance. And I imagine that's especially tough in the fast-paced world of fintech where everyone's constantly innovating and pushing boundaries.
Absolutely. And that brings us to another critical point highlighted in the excerpts: the speed at which reputational damage can occur in today's digital world. We saw how quickly Stenn went from being a rising star in fintech to a company facing collapse.
Right, and that damage can spread like wildfire online. It's incredibly difficult to recover from. That's why proactive risk management is so important. It's not enough to just react after the fact.
Exactly. You have to anticipate potential threats, assess your vulnerabilities, and put strong controls in place to mitigate those risks. And it has to be an ongoing process, not a one-time fix. The financial landscape is constantly changing and new risks are always popping up.
It's all about staying ahead of the curve. But this all sounds incredibly complex and daunting. What does it mean for the average person, someone who might not be directly involved in high finance?
That's a great question. I think there are several key takeaways here for everyone. First, it really underscores just how interconnected the global financial system is. What happens in one part of the world can have ripple effects that reach far and wide. Events that seem totally unrelated to our daily lives can still have an impact on us.
It's like the butterfly effect in action.
Exactly.
Yeah.
Second, it highlights the importance of due diligence, not just for big companies and investors, but for individuals as well. When you're dealing with financial institutions or investing your money, it's crucial to understand who you're dealing with and what risks might be involved. Don't be afraid to ask questions and do your research.
So it's about being an informed and discerning consumer of financial services. What's the third takeaway?
The third takeaway is that even in this digital age where everything feels so fast-paced and fleeting, reputation still matters. Perhaps even more than ever. A company's reputation is built on trust. And once that trust is broken, it's incredibly difficult to rebuild.
Yeah, it really is amazing how something like reputation can have such real-world consequences.
It's true. And in the case of Stenn, that reputational damage, even though they weren't directly charged in the U.S. case, it really proved fatal. A cautionary tale for any company, not just in the fintech world.
It seems like the takeaway here is that it's not just about avoiding doing bad things yourself, it's also about avoiding any connection to anyone who might be doing bad things.
That's a great way to put it.
Yeah.
And that actually brings us to another important point that the excerpts touch on, the whole issue of legacy risks in mergers and acquisitions.
Right.
Remember, HSBC inherited their exposure to Stenn through that acquisition of Silicon Valley Bank UK. And this shows how crucial it is to do really thorough due diligence, not only before you acquire a company, but also afterwards, to really understand and address any potential hidden problems that might be lurking beneath the surface.
Yeah, it's like buying a house without getting a proper inspection.
Yeah.
You might uncover some nasty surprises down the road.
Exactly. And one last point that I think is worth mentioning is that the Stenn case highlights this growing trend of cross-border enforcement collaboration.
Oh.
So even though Stenn wasn't the actual target of that U.S. investigation, it triggered HSBC's actions, which ultimately led to Stenn's downfall.
Right.
This really shows how global regulators are increasingly working together to combat financial crime.
So companies can't just assume they can hide behind jurisdictional boundaries anymore.
Right. Compliance really needs to be a global mindset.
Yeah. It seems like the world is becoming a much smaller place and financial crime is becoming more and more transnational. So companies need to adopt that global perspective when it comes to compliance and risk management.
Absolutely.
So to sum it all up, the collapse of Stenn is a powerful lesson for the entire financial world. A seemingly small connection to a criminal case had enormous consequences. It really highlights how interconnected the global financial system is and how crucial proactive risk management is.
It's definitely a wake-up call, especially for the fintech sector. As this industry keeps growing and innovating, it's essential to prioritize robust compliance measures, sophisticated transaction monitoring, and a deep understanding of the risks involved, which are always changing. Otherwise, they risk repeating the mistakes of the past.
Well said. And on that note, dear listener, we leave you with this final thought. Given the rapid evolution of the fintech landscape and the increasing complexity of financial crime, what new approaches and collaborations are needed to stay ahead of these emerging risks? It's something to ponder as you navigate this ever-changing financial world.